Thanks. Thanks, Nicholas. Hey, everyone. Nice to see you. Some familiar faces. I'm Marcelo Jacques. I'm Chief Strategy Officer at Doc. So for those of you who don't know Doc, we're a payments and digital finance infrastructure provider in Latin America. And our value proposition is to enable any company of any size and any segment, being it a big bank, a fintech, a software provider, a retailer, to offer and scale financial services to end users. So the theme here today is very well aligned with what we believe is the future of finance. Really excited to talk about this with you guys today. So let's get into it. So starting with a quick definition of what is embedded finance, right? Embedded finance is the seamless integration of financial offerings into non-financial products and services. So basically companies offering payments, credit, and other alternative payment methods into their core product offerings. Now, before getting into it, I always like to talk about two questions that we usually hear from clients, prospects, is why are we discussing embedded finance now? Why is this a theme, right? Why is this relevant? And I think that the quick answer for that, it's a huge market opportunity. We're talking about trillions of dollars. An estimate by Bain Company that in the next 5 years, embedded finance is going to move more than $7 trillion globally. It's a global game, so it's not country or region specific. It's agnostic in terms of industry, so virtually any industry can benefit from embedded finance. And it's also multi-stakeholder, meaning that anyone that relates to a company, doesn't have to be just an employee, doesn't have to be just a consumer, can benefit from an embedded finance offering. So the first question, why embedded finance? Why is it relevant? Huge opportunity, right? Now the second question that we usually hear is, why now? Why are we talking about embedded finance now in 2023, one and a half year from now? And that's not because it's new, right? It's definitely not something new. For those who don't know what this is a charge plate that was basically a way for department stores to keep record of getting credit to their customers inside of the stores to purchase their goods and services. So this is something that was used back in 1930, 100 years ago, right? So definitely not new. But for this to be relevant today, something has to have changed. And of course, lots of things changed in the way that we can offer financial solutions to end users, right? The first thing that we like to point out is technology. So technology improvements have been awesome in the last 5-10 years. You see open APIs, cloud-based stacks, software as a service, banking as a service. Basically, that made it easier, quicker, and a lot cheaper to launch financial offerings to end users. The second point is the digitalization of financial services themselves. So users are used to using a website or a mobile app to consume financial services. And that takes a lot, the friction out of building a network to offer financial solutions to end users. And the third thing, of course, we have to mention regulation. Regulation is something that has been evolving throughout the globe when we're talking about fintech, when we're talking about finance. Some places a little quicker than others, of course. I think Brazil is a great example of a country that evolved a lot, its regulatory framework. And regulators are helping the innovators to come to market and disrupt the current system. Now, on the supply side, there's all these changes, right? Now, another thing that changed and it's very relevant is on the demand side, the consumer. We live in a world of hyper-customization. And that's for products, for any type of service, and financial services are definitely included in that. The consumer wants more and more a very specific use case, a very specific offering for that specific moment in time. And that's where we believe that embedded finance comes in and can be a great differentiator and disruptor. Because in our view, embedded finance is much more about embedded than about finance. It's much more about the user experience than the actual financial product attached to that user experience. So at Doc, we have the benefit of dealing with several different companies, and we see several different projects of embedded finance, and some of them go well, some of them don't go so well. And we created this simple framework of the 5 rules that make great embedded finance, and wanted to share that with you guys today. So getting to the first rule, it goes way beyond just customers. So sorry, it goes way beyond just customers. And if you remember, I mentioned before the stakeholders in the definition of embedded finance, and that was on purpose because it's not just the customer relationship that can benefit from embedded finance. You can help suppliers, you can help employees. Virtually anyone connected to the company in the company's ecosystem can be benefited by an embedded finance offering. So we have a great example of a client of ours that is cosmetics industry that sells through direct sellers. And they created a digital offering to empower more than 1.6 million of those direct sellers to sell better their products to the end user. They created an app, they created a digital account, they helped them with payment links, receiving via Peaks. So they improved that experience, and we're talking about a sales channel and not a customer. So it's not just about customers. The second rule is the seamless integration to your current product and service. And that's very important. When we're talking about embedded finance, what the consumer will perceive as a differentiation factor will be consuming finance, consuming payments within a current existing relationship with the entity. So another great example here, one of the largest online accounting providers in Brazil is a client of ours. And they basically help companies with incorporating, paying taxes, and bookkeeping. And they have an onboarding process, but when a company onboards with them, obviously they have to create a bank account. And that was a process with lots of friction for the clients. The client had to get out of that onboarding process and open a bank account or go to a bank branch. And they embedded inside of their current onboarding experience the onboarding of their own digital bank. So it takes the friction out of the process and literally embeds that experience into the current process that already exists. The third, and maybe one of the most important rules, is focusing on value, not necessarily on profits. Profits, of course, are important, but they have to be a consequence of the interaction that is created with embedded finance. So I brought in an example here that's not about a specific company, but about an industry. In Brazil, I don't know if everyone knows, 80% or more than 80% of deliveries of freights are done through trucks. So we have more than 2 million independent truck drivers that are individuals or small companies that 5 years ago basically had a cash-based or a check-based receiving the payment for their services. And the whole system thought of a way to basically help that truck driver to improve and to actually reduce risk, because they were moving around with a lot of cash on hand. That increases a lot of risk. And they created digital banks by the freight forwarders themselves to digitalize the experience and the payment of those truck drivers. So we're talking about bringing value and adding value, and that, of course, brings profit as a consequence. The fourth rule is building upon existing relationships, and this is key, right? We talked to several companies that are thinking about cool offerings, but sometimes they think about an angle that is not or in their core business or not with something that they already have a current interaction. And that current interaction is what actually brings value to the relationship, what actually brings value to the embedded finance offering. So this is a great example that we love to talk about. A big client of ours that they're a retailer in the north of Brazil. They serve millions of people in more than 70 cities in the Amazon. And they basically, this picture here is actually a boat that they actually get to some communities only by boat because you can't get there by car. And most of these people, or lots of them, are people that are unbanked or underbanked. They don't have access to digital financial services. They do everything with cash because they don't even have a bank branch in the cities that they're in. So they created a digital account, and they leverage their brand awareness and the strength of the brand in these communities to bring trust for these people to be able to use digital financial solutions. So they're leveraging a current and existing relationship to bring access and basically banking the unbanked in the north of Brazil. And the last topic, the last rule, is digital accounts are just the beginning. They're just the tip of the iceberg. We're talking about credit. We're talking about alternative payment methods. We're talking about pay-in and payouts, acquiring. So there are ample opportunities or ample possibilities to build embedded finance offerings. A great example is the disruption in credit for small and medium businesses that several players are connecting industries to their small and medium distributors or clients through a mix between credit cards and acquiring. Basically, the SMBs use an acquiring solution from the industry, and the industry has a good view of the sellout of those SMBs. And with that, you can better price credit and also give more credit because you have a better idea of the flow of funds that go through that company. So this is the framework that we build, and we really believe that if you find an opportunity that can fit into these 5 rules, you have a very good case for success in embedded finance. So at the end of the day, in our view, embedding finance into other industries is a win-win paradigm. We're talking about users benefiting with more customized products. We're talking about lots of people or companies that were underbanked or unbanked and currently have access or can have access to financial services through embedded finance. We're talking about providers, the companies themselves, growing their businesses, creating more brand awareness, right? And of course, eventually turning out more profits from that relationship. We're talking about the enablers and the current financial system, banks. They're a part of it. They can be a part of it. They can offer their own built infrastructure to help power these companies. And of course, at the end of the day, it's something that benefits everyone. Society benefits, economic output increases, and we're talking about financial inclusion, which for us at DOC is part of our vision and is part of what we do on our day-to-day basis. So just to wrap up here, and thanks for everyone for being here, we believe that embedded finance started out a long time ago as a niche, but it has the potential to disrupt the current financial market and to change the landscape of how we deliver financial services to end users.